Good morning. It's Monday, the 16th of September, and this is Govindraj Ethiraj, headquartered in broadcasting and streaming from Mumbai, India's financial capital. The Take. What was the Mahindra Group thinking? Now, there are two issues at play in the Securities and Exchange Board of India Chairperson Madabi Buch imbroglio. It is another matter that now she is being attacked by near comical sequential public revelations extracted most likely from her own filings and disclosures and most probably leaked from within her office. So, the first, of course, is whether Ms. Buch returned favours as a Sebi board member or chairperson to various companies, the dates of which I'll come to shortly. The second, and I feel equally important, perhaps even more, whether the companies who worked with her spouse sought any and whether they should have thought through their own actions a little more. Now, there are several ancillary issues here, which of course all arise from the fact that a private sector professional has moved into public life in a financial market regulatory role without the necessary public disclosures that, let's say, a politician standing for elections has to disclose in an affidavit, particularly if they come from a similar private sector background. It is, of course, a continuing mystery to me as to why Ms. Buch does not put out her family's income statements and sources of income for, let's say, the last 7 years, once and for all, instead of playing whack-a-mole with the revelations as they come. Now, back to Mahindra's and the other companies who've done business with her spouse in this period. The Mahindra Group issued a statement last week saying that Dhaval Buch, who is the husband of Madabi Puri Buch, joined the company in 2019 after retiring from Unilever and was hired solely for his expertise in supply chain management. The Mahindra said that compensation has been specifically made and only for Mr. Buch's supply chain expertise and management acumen based on his global experience at Unilever. Actually, the compensation is not the issue here. A decision to work with the spouse, Dhaval Buch in this case, regardless of competence and qualifications, could not have been signed off by some junior human resources manager at the Mahindras. And there are bigger problems, by the way, if that was the case. Now, picture a boardroom or a meeting of senior professionals of Mahindra & Mahindra taking a call on a supply chain professional who has to be brought in or back to resolve a critical, supply chain issue in the company. Surely someone could stand up and say, yes, he's a very good and qualified person, has even worked with us in the past, and we like him. But it may not be a good idea to sign him up now since his spouse is holding an important position in a body that one way or the other regulates our existence too. Now, the purists could argue that this is unfair to the spouse of the person in public life and the decision, if made on merit, should not sit on anyone's conscience. Unfortunately, as is also quite evident, that's not how the real world works. M&M, speaking now as, let's say, an observer or even a virtual insider, should not have signed up, nor should Walkart's affiliate company have taken a house on rent from the Buch family in South Mumbai. Further, I would argue that assuming the spouse joined public life later, then the company in question should take utmost care to ensure nothing changes that could even suggest that there were favours granted. The important thing is that both companies mentioned could have easily found alternatives if they really wanted to, unless they were so oblivious to the potential real-world ramifications down the line. I would find that difficult to believe, at least the part that no one saw something like this coming. Now, the spouse. Yes, given that there is a wealth of genuine experience and qualifications, why should she, or he in this case, suffer? Well, he should not. But the price of public life is such that you can't draw fine lines between you and your family's incomes and then expect that it will all withstand public scrutiny. They could argue that this is an unfair deprivation of income. Yes, it could be, in which case they could have decided jointly, since they are doing that in their public statements, not to take up a role in public life. The explanation that each spouse is an independent professional and has every right to pursue their independent vocations, including in public life, does not actually wash very easily. Actually, that does not happen anywhere in the world, or rather it does happen that scandals erupt from time to time. It's unfair, but it's the real world. So let's go back to the companies in question, the giver and not the taker. No one is suggesting that these companies sought favours or got any, and there is no real proof of that either, at least at this point. But the fact that any listed company has to deal with a regulatory body all the time, that alone should have caused the red flag to go up. All of which has led to a cloud over many parties at the same time and has been made worse by the fact that Ms. Buch is not making a clean sweep public disclosure of her dealings. As a shareholder of either of these companies, I'm not, I would surely ask if there was really a need to stick one's neck out in this fashion. Even if assuming that there was a total lack of oversight on this nuance, I once again find that difficult to digest. This episode should be an object lesson to companies on their dealings in future, because regulatory heads may come and go, but companies and their reputations will be around forever. And that brings us to the top stories and themes for the day. The stock market slowed down once again over the weekend. Wait for Wall Street cues this week. Apple gains market share, but the mobile phone market is still a Chinese monopoly. After Hyundai, another Korean giant, LG, considers an Indian initial public offer. The government hears Basmati rice exporters and scraps a floor price ahead of a bumper crop. The new Oracle is Oracle. And information technology or IT jobs in the United States are falling.
This is the Core Report with Govindraj Ethiraj.
Markets slow down once again. So the stock markets on Friday slowed down once again, as they usually do after a big jump like we saw the day before. The indices had hit record highs on Thursday, rising close to 2% on anticipation of interest rate cuts in China, which could boost commodity industries. On Friday, the BSE Sensex fell about 72 points to close at 82,890, while the Nifty 50 was down 32 points at 25,356. The broader mid-cap and small-cap indices, if you were looking at them or looking out for them, continue to rise. The Nifty Mid-Cap 100 closed at a record high of 60,000, gained about 393 points, and the Nifty Small-Cap 100 index was also up. Foreign investors have now brought in about 28,000 crores in domestic equities in the first fortnight of this month. And they've been consistently buying equities since June. In April to May, they had sold about 34,000 crores, according to all figures from PTI. The only major trigger one can see at this point for the week ahead is what the Federal Reserve will do in the United States on Wednesday and how much it will cut interest rates by. Now, this will be the first time in 4 years that it would cut interest rates. The European Central Bank, by the way, has already cut rates twice in the last 3 months. The Wall Street Journal says the size of the first cut by the Federal Reserve and where rates will be in 3 months from now is anyone's guess. Traders are assigning a nearly dead-even chance that the central bank will unveil a 0.25 percentage point or even a half-point cut on Wednesday at the conclusion of its meeting. Investors are now trying to discern whether recent economic data is simply showing a hot economy returning to normal or the early sign of a recession, according to the Wall Street Journal. Interest rate cuts will obviously mean that more money will flow into equities, world over. The second Korean giant, LG, looks at an IPO in India. South Korea's LG Electronics is looking at an Indian initial public offer that could raise up to $1.5 billion, according to Bloomberg. This IPO could take place as early as next year and value the Indian company, that's LG Electronics India, at about $13 billion. And a prospectus could be filed with the Securities and Exchange Board of India as early as next month, said Bloomberg. LG, of course, follows Hyundai Motor Company, the other Korean major, which is also looking at an IPO later this year and is expected to raise about $2.5 billion in that offer were it to happen, which would also make it perhaps the largest this year. India's foreign exchange reserves still rise. Foreign exchange reserves in India are continuing to rise and have hit a record high of about $690 billion as of September 6th. Data from the Reserve Bank of India on Friday, quoted by Reuters, showed reserves rose by about $5.3 billion in the previous week after having risen by about $14 billion in the previous 3 weeks. So the rupee now has been closer to 84 against the dollar in recent weeks and has now settled at 83 rupees 88 paise on Friday, having strengthened somewhat and quite strongly, at least in a relative sense, in more than 2 months. Could smartphone sales see a bump up this year? The upcoming festival season could push up smartphone sales, and iPhone's new launches, or rather the iPhone 16, could help. Apple's new iPhone 16 could also drive up exports, which touched about $12 billion last year, and of course, local sales further. The iPhone 16 will be available this week in stores along with other Apple products with new and improved versions. Some 157 million smartphones will be sold this year, and 33% of them will be financed by loans, according to Counterpoint Research. Loans obviously make it easier for people to buy smartphones, being aspirational products, including in the premium smartphone segment. So the interesting thing is that despite Apple's growth and Samsung's command, Chinese brands like Oppo, Vivo, Realme, and Xiaomi control over 60% of India's smartphone market. I reached out to Tarun Phatak, research director of consulting firm Counterpoint Research, to understand how the premium smartphone market was doing presently and what iPhone 16's arrival could do to it.
We are at a very interesting stage of the year when festive season is about to begin in the next couple of weeks with all these online players like Flipkart, Amazon gearing up for that Big Billion Day sale and the Amazon Great India Festival. So what we are currently looking is a positive trend, especially on the consumer electronic, deep diving into smartphones, especially. We are seeing a healthy upgrade cycle in our consumer research, whatever we are picking up initial, the early signs are looking positive. So as a result of it, what we are predicting is a 3% volume growth, although this is still single digit. But if you look at the value, I think it should hit close to like 8 to 9%, which means people will buy more high end products during this festive season. And one of the reasons why we are a bit optimistic on this growth is because if you look at the previous cycle that came into in India market, that was 2021, when just after the COVID, there was a huge pent up demand. People bought a lot of these electronic goods, including smartphones, and the demand really went up that year. So that was the year 2021. At the same time, if you look at the replacement cycle in India smartphone market, it is closer to like 38, 40 months, which brings us very closer to this time of the year when people who bought their phones in 2021 are looking to replace them in 2024 or so, and they'll use this festive season as an occasion to upgrade themselves. And that's why we are a bit optimistic. And at the same time, there are other factors like macroeconomic, we are better. We are also looking into some of these trends that are happening in India market, like for example, premiumization and at the same time, affordability index. Right now, almost like 33% of the overall smartphones are being purchased on EMI. So a bit by bit, everything is there. So I think the key takeaway will be like high-end phones, premium smartphones, what we call, we expect their growth to be much faster than the overall smartphone market.
How does this outlook contrast with what you had projected, let's say 3 to 6 months ago, in terms of total number of smartphone sales as well as the activity in the premium end of it?
Right. So we were projecting almost like flattish growth for the year earlier because first half was not that great. Like first quarter was very bad. People were not upgrading the phones. Macroeconomic conditions were not good at that time. And at the same time, we have seen not a lot of new launches as well. We have done in Q2, heat wave was there, and then again, people didn't go offline and buy these products. We saw inventory building up in the channel. So first half was not that great, but now we have seen Prime Day in July. There were multiple new launches. Even during Independence Day sales, the sales is getting better and better every week. As a result of it, have increased the projection to 3% volume growth, 8% value growth. But premium market, we are still at the same. It will grow double digit this year for sure.
Right. So if you had projected about 157 million smartphones this year, that's 24, 25, are you holding the same number then?
Earlier, it was closer to like 155. Now we are in close to like 157, 158.
Tell us about premium end now. So we've seen the iPhone 16 announced and now about to launch and hit the stores in a week's time. So how is it likely to disrupt or affect the market at this point?
Right. So I think the demand for iPhones remain very healthy, like even almost like 4 days since launch, right? 3 days since launch. So what we have seen, there's a lot of inquiries that are coming, like, okay, people are waiting to upgrade. And there are two things that are working, although one can argue that the hardware changes are merely incremental. That has always been the case because the benchmark for Apple is super high, right? Hardware is hitting a plateau in terms of like changes. But there are two things that work in Apple's favor. One is they have been accumulating a good amount of user base in the past 3 to 4 years in India. And this user base is actually very sticky. So there are higher chances that there will be an increased mix of people who will upgrade from iPhone to iPhone this year. So that number used to be less because your base was less earlier, but now Apple has picked up base in India. The second thing is the first time iPhone user. I think that is where Apple will continue to gain. And that is why they are growing double digits in India because the amount of first time youth, college going students, people who are entering into the job segment, the aspirational value for Apple remains very high. So, and that is point number two. The third is if you look at right now what is happening, they have positioned the iPhone 16s as a generative AI ready phones, like with the Apple intelligence. And just like 5G, people wanted to be like 5G ready. I think a lot of these users will say, hey, I'm going to upgrade to an iPhone 16 because I want to be an AI ready phone within an Apple ecosystem. So that will drive the overall ASP of Apple in India. So it's working for them. And what we are hearing, the offline demand this time will be much higher for them because during the festive season, we have seen like Flipkart dominating the show even the last couple of years when they have been like reducing the prices of the N-1 or N-2. This year, yes, online will remain, but at the same time, Apple will get a lot of benefit from the surge in demand in the offline, especially in tier 3 and tier 4 cities.
Right. So, how does Apple's first-time users, incremental first-time users, compare to other brands? Number one. Number two, what's shifting or changing in the dynamic between the big brands in India, Tarun, like between Apple, Samsung, and so on?
Yeah, so Apple's first time users largely very high. So, for example, these are the users who are entering into the premium segment for the first time. So, most of them, they are like the users who have been the users of OnePlus, Samsung, Vivo, Oppo. So, that shift from Android is happening. So, that Apple continues to enjoy because it's like a Hotel California, like very easy to get into, very difficult to get out. So, that's Apple for you, the stickiness of the ecosystem, which will even increase more with the Apple Intelligence. So that is from the Apple side. But if you look at the other brand strategy on the Android side of things, they are also going very aggressive. So, for example, Samsung is going very aggressive in terms of the form factors, foldables, and the AI strategy as well. So that's what a lot of these players are doing on the premium side of things. Like Vivo is doing great with the cameras. So they are playing more on the latest and the greatest specifications. Apple is more on the brand value and aspirational value. So it's a different strategy. Like Vivo is more on the camera side, Google is more on the software side, Samsung is more on the AI and the form factors. And yeah, it depends. Like there are still a lot of users who still prefer Android ecosystem for the sake of simplicity, and they will continue to find these upgrades very exciting in terms of the hardware parameters of features we have currently and the kind of devices that are going to be available during this festive season.
Tarun, thank you so much for joining me.
Thank you.
No floor price for Basmati rice exports. Last week, we spoke of a government floor price for Basmati rice exports at $950 a ton, which exporters, including On the Core report, said were making them uncompetitive and causing them to lose business, including to countries like Pakistan. Moreover, there was a bumper rice crop on the horizon in India, the exporters said on the Core report. On Friday, the floor price was removed. Satish Goyal, president of the All India Rice Exporters Association, told Reuters that the decision to do away with that minimum export price or floor price would help India export basmati rice in large quantities, and that is going to ensure good returns to our farmers. Citing India's rich biodiversity in basmati rice, Goyal said that there was a big overseas market for basmati varieties that were priced around $700 a ton, so it was logical to remove that higher export price or minimum export price altogether. The Oracle. Remember Oracle, the database company? Well, it had its best week on the stock market since 2021 and has bolstered Chairman Larry Ellison's net worth, briefly edging him past Amazon founder Jeff Bezos on Friday to become the world's second richest person, according to CNBC. The first, or the richest, is Elon Musk. Ellison's net worth reached about $208 billion shortly after market open, but then fell to about $197 billion, according to Forbes' real-time billionaires list quoted by CNBC. But Oracle stock rallied 11% on Tuesday after the company reported quarterly results that topped expectations. Its stock is now up 54% this year, only behind AI chipmaker Nvidia, which is up 141%. Ellison started Oracle, or rather co-founded it, in 1977 and owns about 40% of the outstanding stock, making him the company's biggest stakeholder. But the interesting part is this. Oracle's revival in recent years has been sparked by its improving position in cloud infrastructure and growing adoption of cloud databases, according to CNBC. On Monday, Oracle said its database software will become available for AWS customers, that's Amazon customers, to use atop Oracle hardware sitting inside of Amazon data centers. Over the past year, Oracle has also forged similar partnerships with Microsoft and Google, the other two leading cloud infrastructure companies. Ellison told analysts on this week's earnings call that Oracle is now in prime position in the cloud and in traditional data centers, according to CNBC. US IT worker unemployment numbers rise. Now, this might or might not come as a surprise to you, but the unemployment rates for information technology or IT workers in the United States is rising to levels not seen in a long time. Now, whether this has a direct impact on India or not is not clear at this point, at least to me. But as you know, India's IT employment levels are somewhat steady, considering there are reductions in some parts and perhaps some increases in others like global capability centers. Now, in the United States, IT unemployment levels rose to 6% in August, up from about 5.6% the prior month, as the boom in artificial intelligence continued to drastically alter the tech landscape, according to the Wall Street Journal. The Wall Street Journal also said, quoting a consulting firm, that joblessness for IT works is at its worst since the dot-com bubble burst in the early 2000s, and the culprit is AI. According to consulting firm Janco, which said that AI is causing seismic changes comparable to that seen when personal computers came into wide use. They also said that job reductions in IT remain concentrated in traditional technology roles like managing back-end corporate systems, while AI and cybersecurity are providing pockets of growth. That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in, and thank you once again for listening.